was the organizer, so it's a bit weird. The webinar just really collapsed or just restarted out of the blue all of a sudden without any warning, and we have no idea why, so it's a bit strange, but we are back, so apologies for that inconvenience, but no idea what happened. But anyhow, we are back, but this is kind of like a new broadcast, so before we start, I do want to make you aware of the fact that this is the strategy webinar. We have looked at this risk disclaimer, but because we're starting the webinar from like again, because we clicked on the button again, so please be aware of the fact that this webinar is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To find out if it is and get more information on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and global financial markets is considered high risk, and it may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice, and the webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here, and as always, I thank you for your attention. Alrighty, folks. So, with that said, we can continue with the webinar because this we already discussed. So, let's go back. I was in the middle of talking about the fact that you want to keep light on your feet. Well, the Aussie is an example of that, where it closed and reversed. The Kiwi was a bit better. The Kiwi actually was easier indeed. Here was a bit of a bouncing spot, but struggled. It went sideways. So the Kiwi, for instance, here, when it struggles that long sideways, I get very, very careful of any trade in that direction. Either put the stop loss very tight above these fractals or even take off the trade. The upside, however, was not a consideration for me with the Kiwi. Why? Because look at that time. Sorry if this is too many. This is quite crowded, this chart. Let me get okay. When you have 4 moving averages, it does, plus the camera less. So I cleaned it up. This is the new one. So the upside was not in question here, because when price broke through these fractals, the moving average was still bearish. And it didn't have, well, this candle made it bullish, but that was just the first candle. So for me, upside on the Kiwi is out of question. It was not a bullish trend. There was not a bullish momentum at that point. But the Aussie and the pound did at that point, right? So when you look at the Aussie, you'll see the difference. Bullish moving averages, pound, bullish moving averages. The Kiwi flat. So the Kiwi was out of question. Even though it moved up, didn't touch it, right? Wouldn't touch it. So here at the moment, moving averages are flat as well on the Kiwi. The Aussie too, the dollar yen too, although there is that bullish momentum here on the well, not momentum, but I should say the bullish breakout potential. As I said, though, I'd rather wait for a break, pull back, and go. If I would trade it, which I severely doubt at the moment. Let's see, what else do we discuss? Your dollar out. The one that seems the most interesting at the moment is this pound yen. This breakout is actually breaking out with good bullish moving averages, pushing through the H3. So that looks good. The euro yen is flat, doesn't look good. So one of the better ones at the moment today is the pound yen. If I were to trade it, euro out is flat. You can see yesterday there were the pound out is a bit different. This is bullish moving averages, and it's breaking above the H3. So this is a bit different. This is a breakout scenario to the upside. So this is also just like the pound yen in a breakout situation. Dollar CAD 2 is different. It too is just hit the L3. So if we get a fractal here with the bearish moving averages, if we get a fractal, if price breaks then through the fractal and the L3, there could be that breakout as well. So not many options for the moment, but anyhow, we're going to take a look at the hourly now. If I just check if I missed something. No, I think we discussed some 8 or 10 pairs, so that's a good number. Actually, the L3 and H3 are basically the zones where they're built around the pivot, and basically they indicate when price is going to break through kind of what one would expect to be a range of the day. The H3 and L3 are kind of the range of the day. So the H3 and L3 are typically where price bounces in between when it oscillates at the beginning and throughout the day. Once it starts breaking above the H3 or above the L3 or below the L3, price starts to get in more breakout trendy territory within the day. So especially if you get that above H3 and H4, then you're in a trending mode. Target, for instance, could be the H5 and L5. So it kind of gives zones in the intraday world and gives us a quick measurement of has price gone anywhere, where price is in relationship to the expected zone of the day, and what bias does it have. What you could look for is, for instance, the moving averages in the 50-minute world to be bearish and bullish as well, to give extra momentum. Besides looking at these horizontal levels, even looking at the hourly to see what the trend is there by looking at the 21 EMAs. Here the 21 EMAs are bearish. So if we look at the 50-minute chart, we see also bearish momentums. Then taking the breakout to the upside, even if price is at H3, could be going against the hourly trend. So there's an option to skip that and only look for breaks to the downside. If there is a strong trend on the hourly, one could even look for rejections at the H3 and H4. Price action rejection signals, candlestick pattern signals that indicate rejection between H3 and H4 for downside, or a break below L3 based on the hourly trend. How it's calculated exactly, I'm not all too sure. It's an indicator, so it updates every day automatically, and I don't have anything to calculate as it's done every day for me. But so I don't know by heart how it's calculated, but it just gives the range and breakout levels, basically. All right. I use it primarily in the 15 and 30-minute chart. On the hourly, for instance, you wouldn't see it anymore on this chart. That's also because I don't want to clutter the chart too much for you viewers. But I think it also makes sense not to have it on the hourly, because here I have the normal pivot points. How do you show it on your chart? Basically, you want to click on Insert, Indicators, Custom, and then go to Camarilla. But you need the indicator first of all, so I'm not sure if you have it. But if you have that indicator, then that's how you would add it to the chart. If you don't have it, you can send me an email. And I'll get it to you, okay? Just send me an email with a reminder what the topic was, and that's great. Alrighty. So the hourly chart, let's take a look at the hourly. Your dollar is very, very it's very consolidating. Looking at the moving averages, it's going flat. We can even take in this case, I don't mind taking the moving averages off, because the moving averages will not help us anything. It just shows that it's a big consolidation. So let's look at it from a bit cleaner point of view, so that it's not too cluttered. And what do we see here from a price action point of view? We see on the hourly chart a channel which is suspiciously looking like a bear flag. A bear flag that has lasted pretty long, all the way dating back to the 9th, which is already 8 days. And that's how sometimes price can steam downwards, and then all of a sudden, boom, revert into consolidation. That consolidation happened a bit earlier than I expected. I expected one more break of this bottom, to be honest, before we would get maybe some kind of consolidation. It happened one break earlier, or one break less, I should say. And we had a lot of momentum here. That was at Thursday, the interest rate day. Then we had the expected break of that bottom. and then we reverted into this consolidation. You can see how long that can last. And I did grab some pips from this bottom up to this top in here, exited at 129.80, although it hit 129.94, 129.93-ish here, but didn't expect much more because of the 130 psychological number. Also, not only the 130 psychological number, but also if you put a fib here, it could be a 38.2 fib or a 50 depending on how you fib it. Right? So anyhow, resistance, a 30 round psychological number plus some kind of fib depending on how you fib. So obviously, yeah, that to me seemed a pretty likelihood that price was not going to be able to break through it. Now we're at the bottom of this channel again. Will price have enough momentum to break this bottom of the channel? I highly doubt it today, or I highly doubt it within the next hour. Today, eventually, we could. I guess FOMC could have enough power to accelerate this up or down. So technically, it looks like a bear flag. But with an FOMC, it really could fly both ways. It could use this bottom of the channel as support and now break 130, or it could the news event could be so strong that it could break it. So it's really too tough to tell. But from a technical analysis point of view, if you didn't have FOMC around the corner, this looks like momentum. This looks like correction. It still seems more likely that the bottom of this bottom will break and will fly like that to the downside. But the confirmation is the break of the bear flag. And there's nothing to do unless price pushes through that green line. There's nothing to do unless that bear flag gets broken. There's nothing to do unless this bottom gets broken. If it does get broken, the target will be around 127.60-ish, which is the bigger weekly bottom right in here. That, however, although it's a support level, could just be a bouncing spot within this big downtrend. So that's it. You know, I think that's all what we can say. If price does not break the bear flag and actually starts to move up, then we could see a bigger retracement of this downside, and you know, any upside could see, for instance, still problems with 130, right? Could still have headaches with 130. After that, probably something like 130.44, which is a 61.8 fib, or we can even put a fib on the opposite side. We can start putting a fib on this swing high, swing low, for instance, and we can see that we stopped at the minus 272 target. The next one would be the minus 618 target. At about 130.30. All right, so 130.30 would be probably the next target after 130, and that still, even if price does get up there, would still be a resistance zone, in my opinion. So 130.30 or 130 would be then the resistances for the moment, and if price does break to the downside, it would be a breakout potential down to 127.50. In the meantime, though, price could really stay stuck in this bear flag for longer than we think. Otherwise, I don't think really there's anything to add. I mean, from a long-term perspective, from a daily perspective, we're obviously in a big downtrend. However, we've been consolidating even on the 4-hour chart visible. So the question is this downtrend finished? No, it isn't, because there's too much strength to the downside, in my opinion. Looking at this AO, you can see a lot of momentum down. This downtrend is not finished. It's just a question of when and where will we get one more downside, at least, if not two. I do think that 127.50 support will crack eventually, but there could be, for instance, this going on. There could be some consolidation, then finally the break, then the bounce off 127.50 in a three-wave correction, and then again a break. Something like that would not surprise me. Obviously, though, the more we look into the future, the more variables come into play. How will price react to 127.40 support? How will price respond to that weekly level? That, of course, will influence, again, how and what is likely after that. It's basically like a decision tree, and every time we look at one step further, there are more and more options for price to go. And although we could have a favorite, we could think, okay, this seems the most likely path. If price then does something that is not as expected, but still makes a different move, then we have to recalculate again what is the most likely path of the least resistance, a couple of steps down the road. That's why the more we look into the future, the more options we have, and the less probable we can look at what is likely. For the moment, this is looking like a downtrend. It is acting like a downtrend. There's a lot of momentum. So I would be looking for downtrend continuation, but it's just taking a lot of patience. And the question is when and where, either from here or from here, in my opinion. After that, we'll have to see. Pound dollar is basically the moving average not providing much guidance on the 4-hour and hourly because there's a lot of choppiness. The 4-hour gives a bit of a better and clearer picture, like the daily too, by the way. You can see here, look, price is below the 21 EMA band. So it's a lot of momentum, right? A lot of power to the downside, a lot of bearishness, and the 4-hour chart confirms that. Look at how the 21 EMA is being pulled away from that 89. Beautiful. And here, look at that gap right in here compared to this. Compared to this gap. Compared to this gap. Bigger gap. Big momentum here to the downside. Big oscillator reading. Look at that oscillator reading. Huge. So bearishness, yes. Very much so. And we've, in the meantime, gone to the zero line. So here too, looking bearish in my opinion. Pound dollar looking bearish. And the question is when and where for the moment. And the 38.2 fib is something I was thinking about. The next one could be the 50, depending on how you fib it, because you could even fib this entire swing high, swing low from here, for instance, that the 38.2 fib could be a bit higher. And so that depends. But in my opinion, a move up is a move up to resistance. If we start fibbing here, we can see fib resistance targets. From a pivot point of view, we have a cluster of pivots around 163.40 here, M2, R1, a weekly R1, and a monthly S2, a daily R1. For a breakout trade, however, price would need to break below L3 or break below basically the daily pivot point, at least, if not through the weekly pivot point, or even break below this trend line. So for a swing trade, that's what I want to see. I want to see price get below the 1 hour 21 EMAs, get below the weekly, and get below this trend line preferably for that breakout trade on the hourly. From a 4-hour point of view, same story. I want to see price break below the 21 band on the 4-hour, break below basically this support level. That's it from a bearish point of view. The other option, as I said, besides the breakout to the downside, is waiting for price action to get look for bearish signals. So you can see if you look at long-term analysis on the hourly, let's say, and 4-hour, the picture looks a lot different. Here, looking for bearish reactions for downside or bearish breakouts. And if we look at 15-minute time frame, it looks like a bullish breakout to the upside because it's knocking on the door of H3 with bullish moving averages. So it's funny how sometimes those time frames can look differently. And although the breakout on H3 here to the upside on the 15-minute world could work out great, there's reason to be cautious of longs on the hourly and look more for shorts. So ironically, sometimes it could be even possible to take a long on an intraday like this and kind of close in reverse or at your own pace. Obviously, this is a dangerous concept, so be careful with that. But there is that potential then to take an intraday long and even follow that up with a long-term short higher up when intraday momentum to the upside loses pace. But this is risky, right? So just be cautious and practice it with demo sufficiently. The dollar-yen hourly is looking just like the pound and euro. It's looking bullish, right? It has bullish moving averages. Now it's making consolidation. Same story. Here, big momentum to the upside. Look at price accelerating away from 21 EMA. Most of the time actually being above it. 21 EMA green. Good angle. A lot of power of the dollar here also against the yen. We just recently retraced down to the 21 EMA and we're bouncing above it. So a break, when price breaks above this 120, 107.30, from a 4-hour point of view is looking like a breakout, and an hourly too. So it's looking like a breakout situation soon on the dollar yen. Just like the 15. So in this case the 15 and the hourly are lining up. But sorry, that actually is of course because the dollar yen is moving up, but the pound dollar is moving up as well. So the dollar strength is, some dollar strength is occurring against the yen, but actually not against the pound, because it's losing a bit at the pound at the moment. Let's see. Kaden is suggesting a trade setup on the IDM. We're going to take a look at that. Now that we've finished the dollar yen, we can take a look at the euro odd. Bjorn is asking about how I read the euro odd. If I look at the hourly chart, let's see. The question is, isn't top lower top, then bear flag, but then daily break of trend line, pull back to trend line, and maybe up? Yeah, this pair is a bit funky because of this strong upside here. With good, very strong momentum. This was a bearish candle at a very strong upside here, right at the 89 EMA. If anyone took that rejection candle, bearish candlestick pattern, that made sense because we had a good run up. There's always that potential for rejection when you make so much move up, and if you get a good price action candlestick pattern on the daily, it does make sense. So, that trade could be up a few pips, but generally speaking, this is a very strong momentum on the 4-hour, engulfing the last swing here. On the hourly chart, it's actually starting to look like a bull flag. So that's possible. Now the moving averages on the hourly are flat, so I want to see some momentum. I want to see price actually break above it. Here, I'm not going to trade it, by the way. I want to see it break, pull back and go before trading it. Or I want to see a break, pull back and go before trading it. It's the same story either way, because of its unclarity. It has a strong downside, but it was matched with an even more powerful one. And that 4-hour upside, however, is still taking place within the daily downside. So the daily and the 4 hours do not seem to be matching each other. There seems to be quite a discrepancy between the daily and the 4-hour chart here. So yeah, I would be careful with this for the moment. $15 point of view, it's caught in between the H3 and L3. Daily point of view, it is true though that although it's a downtrend, I do agree with the fact that it broke this trend line, but it didn't happen with a very necessarily a very powerful break, unless you draw the trend line like this. Why is it not a powerful break? Because there's just a couple of candles, one candle to be precise, above it, which is bearish. So the break is still a bit early. Plus we have a top resistance levels to consider still. A lot of resistance here. 3 layers of resistance in my opinion, or maybe even a quadruple layers here. So the breakout of the daily trend line shaky and a lot of resistance still above us. So from a daily point of view, I would not consider it necessarily a strong breakout. 4 hour though, there's a lot of momentum. So I'm just cautious at the moment with the euro odd. Euro odd. Odd yen, there was a lot of odd weakness in the market versus the odd New Zealand, versus the odd dollar, even versus the euro odd, even versus the pound odd, even the odd CAD. The odd yen is one of the exceptions where the odd didn't have much weakness. That's probably because the yen is weak as well. So the odd yen didn't move down as much. The odd yen moved down a bit on this 4 hour chart, as you can see. But that downside is still small compared to the upside swing. And if we put a fib on the upside swing, we can see price stopped about the halfway, the 50 fib. Totally different structure. Weekly candle and chart, what do we see? We see an upswing. Different than the Aussie dollar. We have some downside here, but in the meantime, price is making kind of an up channel, of which recently price broke through a major resistance line and top, and now seems to be bouncing off that same line that was in the past resistance, now looking like it's acting as support, and we had a big, strong daily candle at that level with bullish moving averages. So the Aussie yen totally looking different than all the other Aussies here, whereas the euro odd is moving up, the odd yen is moving up as well. And so in that regard, I can see the reason for bullishness, and it's looking like a double bottom here on the hourly chart. So that makes sense. We stopped at the weekly pivot point, but it could be just a pause. 50-minute chart. What would be probably interesting to see is either a breakout when the moving averages turn bullish and price breaks up towards H3. That's what I would like to see. Price gets to H3, stops at H3, moving averages turn bullish, and then price starts to break above H3. That's the breakout approach on the odd yen to the upside. Now let's take a look at Kaelin's idea, which is a long at 96.90. 96.90 is here with a stop loss at 96.57. I'll just make that green, and the target I'll make blue, which is 97.10. So first of all, great stuff, Kaelin. That oh wait, no target. No target is 97.70. Sorry. I doubt does it come there. If not, how would it be 97.10? Okay, cool. Let's take a look. So. Yeah, if it gets there, I think it's a good long area. Anywhere here, L4, L3, I understand that makes sense to me. The L4, there's the stop loss. Let's take a look. Is okay. It's on the tighter side from the hourly point of view, and it's in the middle of the move on the 4-hour chart. And the middle of the move, or at the bottom of the daily candle. But still, I mean, if you want to be a bit safer, you can use yesterday's low for the stop loss. But that, of course, increases the total stop loss size. But that is a bit more spacious. However, it doesn't mean that this stop loss below this hourly bottom could not work out, though. It's just a bit tighter, that's all. The entry makes sense if price gets there. I like it. It's a top in here. And we could see potential bounce spot here indeed. There's no specific pivot point that would indicate that level. And the question is, will price indeed get there? Because it also could bounce higher from 97, for instance. which is a round number, and closer to the L3. Let me put fibs on this move. So this top, according to the fibs, it will be an interesting level. If it breaks this top, the likelihood of price getting probably all, towards that level is less likely at the moment. If it does get there, if it does move down, 97 will probably be 97 or 97.10 could be bouncing spots indeed. So although 96.90, I would have nothing against it. And of course, this is just a rough idea. It could really go to 96.90, but I think that 97, 97.10 maybe, probably 97 would be the better level in my humble opinion. Obviously, it's just an opinion or my analysis. When looking at the fibs, the corrective fibs. But if it breaks above 97.42, then probably the chances of it getting there are also on the lower side to get to 97. So either waiting for a breakout above the blue line or a breakout above H3. If a breakout above the blue line is taken, I would aim for H4. If a breakout above the H3 is taken, I would aim for H5. If a bounce of 97 is taken, then aiming for H3 makes sense because you're aiming for about a good 70 pips. So that's my 2 cents. But obviously, we have to see. Maybe it does dip down or even further down. You never know. So if you have any questions, let me know. Let's see. Björn was in it from yesterday but sold it based on the 2 tiny candles. Let's see. Not sure which time frame. The hourly, maybe? Oh, yeah. Probably maybe these 2 here. Well, in any case, I'm not sure if that's where you sold it, but maybe it was somewhere else. Well, if you did sell it here, that's actually is working in your favor, but I would be cautious in, oh, the last 2. Okay. You sold it right here. Got it. Well, we are making lower lows and lower highs on the hourly, so it could make that dip down. It's possible, but I would not be that enthusiastic about it just because of the fact that we have momentum on the hourly to the upside with strong 4-hour candles and a strong daily candle. So that would, make me not so enthusiastic about the downside. But if you put fibs on the corrective downside, the current fib is this. So there is that chance the price could move. If you, I don't know what price level you sold at, 97, 29 or something like that. There is that chance the price could use these fibs still to move down to the minus 618 target, which is at 97, and then move up again. But I would put the stop loss probably just above this 97.42. Not much more. Just enough to 1 pip and spread. Yeah, you got this trend line indeed coming in. Good view. And maybe this one here. To take profit, understand. Not a real new short. Okay, yeah, that's, well, there's nothing wrong with taking profit. You might want to space it out, take some profit so you still leave part of the trade over. Scaling out has the advantage of taking profit along the way, but also still allowing sometimes for kind of a second or third part to go for a bigger run. Plus, maybe a psychological advantage that you're not beating yourself up for closing the entire trade, even if it later goes your way. So that can sometimes give a mental balance. Nothing wrong with taking profit, unless, of course, you specifically had a plan to say, I'm going to hang into a target or I'm going to do that and that, and you kind of went against your own plan. Obviously, then that's a pity. It's always great. I mean, the best situations are always when you follow your plan, obviously, but that's something only you know. But taking profits at certain spots is nothing ever wrong. Even if this looks like a corrective consolidation from upside, you really never know, because if you look at the 4-hour and daily chart, it's still quite a mess. It is on the daily. I would say it is an uptrend. The 4-hour, however, made a pretty strong correction. So yes, we did have a bounce off support, but will we get the follow through? Still remains the question. It's a bit early on the 4-hour side. So hourly candles. Pound yen is pushing through indeed, but I didn't take it. But from a theoretical point of view, I was saying this break of the fractal would be what the strategy is looking for. It's up 20 pips. Not much though, because we're aiming for more, at least the H4, if not the H5. From a 1-hour point of view though, prices had a good dip and now bounced back above the moving averages. So from a 1-hour point of view, there could have been a breakout trade right in here when the price broke these fractals. Moving averages are bullish. Fractals here, boom. That's the swing trade. Even the 4-hour, actually. 4-hour candle closed above the 21 band, boom, right there. That could have been a 4-hour swing trade too. So hourly and 4-hour, same stuff. Same thing for the euro yen, basically. Euro yen also retraced back to the moving averages, bounced off it, and could have been a bounce trade on the euro yen here with an entry somewhere in here for upside. What else? The Aussie? Bit of a mix. Wouldn't be too interested in that from a 1-hour, 4-hour point of view. Only if it dips back below the moving average for downside, because we're looking for the moving averages to show a direction, and the only direction here is down. So if price breaks and closes below this 21 band, it could be a different story again. All right, so this is how you can basically scan the markets on various time frames and look which time frames have interesting situations going on, right? Which time frames are showing interesting angles on the moving averages, on the hourly, 4-hour, daily, which have confluence, which pairs have time frames that are supporting each other. Sometimes you see that the 50-minute world is totally different than the hourly or 4-hour. Which AOs have strong readings, like this 4-hour, for instance. Very strong downside. So that's how you can scan the market and see which ones have a swing trade potential. What I'm looking for is either on the 50-minute world, moving averages to be bullish and bearish and have a direction and then break above the Camarillas, or bounce off the Camarillas, or I'm looking for the hourly to be aligned, or 4-hour to be aligned, and looking for instance, like the pound yen, for price to break above the moving average again after retracing back to them. And that's how swing trades could be done. Stop losses and TPs vary from structure to structure. 1-to-1s, 2-to-1s are always not that bad though, but typically I would like to use fib targets. Sometimes trading stop losses. I use fractals most of the time for stop losses, or in rare occasions use pivot points and moving averages to hide them as well. So I think that that would probably wrap up today's session. I'm going to close it a bit earlier than usual, although actually the duration is officially 30 minutes according to the timer. We had a bit of an interruption actually as well, so we've been almost here an hour, but I have to run a bit, I'll close it a bit earlier because I'm expecting a quick visit, so I would need to close it now, but thank you for being here tonight. We'll be back to be precise. And he's going to take a look at what type of divergence to trade tomorrow. We'll be back with fibs and wave trading. We'll just definitely take a look at long-term trading if you like that. And how can fractals from Williams booster trading is tomorrow evening. An evening webinar on TP Björn is suggesting, which is a good idea indeed. I think we have an exit, or we had an exit webinar recently, but it wasn't on TPs, I think. Well, maybe partially. It's not. Oh, it hasn't been uploaded. Well, you can find it on YouTube though, or Vimeo. I think that was recently a video on now I lost my train of thought on exits. If you're specifically looking at take profits, we had one the 13th of March this year, aiming for the best take profit zones. 13th of March, Pro Learning Lab. So, I mean, I wouldn't mind doing that topic again because I do think that take profits are great stuff. So, very important, and exits in general, but probably we'll wait till November, I guess, because October ones are already in the making. I mean, regarding the topics, I should say. Why the webinars? Yeah, they're not being uploaded indeed. That's partly because the uploader was on vacation, but also because the IT department is a bit overloaded at the moment, so apologies for that. But you can find the webinars on YouTube or Vimeo, the ones that you would like to see again but haven't been uploaded at the moment. So you can always find it there. Just, I guess, look for Admiral Markets and on YouTube and look for Admiral Markets and then maybe click it, type in probably what are we looking for again? We're looking for Trading Lab, sorry. Forex Strategy or Live Trading Lab. Well, traders, thanks so much. Be careful today, though, and tomorrow. Well, I'll talk to you already tomorrow again, actually, but because, you know, there's a lot of things going on, so price could see some volatility, maybe. Time will tell soon enough. But do wish you all a very nice day. See you soon. Cheers.